essential part of trading. It calls ATR, average true range, or average daily move. For us, it is important to know it because ATR, it is a fuel for instrument. Because, for example, Euro USD moves 65-70 pips per day. There are a little probability that price will move far more per day. There are only maybe 10 or 15% of days when price move more than one ATR. For us, as for traders, we need to use mathematical expectancy in our trading. There's a little expectancy, there's a little chance that price will do it. That's why I use proper ATR. I want to show you two types of ATR which you can use in your trading. First, if mathematical ATR, how it looks. You can count it, math ATR. Let's call it math ATR. It's high minus low of daily candle. For example, Euro USD in average it is 65 pips. You can count it just high minus low and you have your ATR. When price moved more than 80% of ATR, it is not good to open position to continue the trend because there is little chance that that will happen. But if price break historical low or maximum, you can trade without ATR. In that case, ATR doesn't work. In that case, it can move 2 or 3 ATR or even more. ATR you need to especially for intraday trading, because when price move ATR, you don't have enough fuel to open a position. Price will not move. When price moved more than 1 ATR per day, you can open counter trend entry. For example, Euro USD move it up 80 pips. It is better to open a position, to find position to open sell, because price did its daily plan. And there is a big chance that there will be a pullback. Intraday traders, for you, it is the best places where you can open entries. Also, about ATR, it is important how you can count it. First, you need to look on the last 5 daily candles, but don't count paranormal candles, which more than 2 ATR, and don't count really small candles, which less than 30% of daily move. And after that, you will know how the price moves in average per day. You just count this ATR. For example, here we had 65 pips, here 60 pips, here we have 70 pips, here we have 25, 150. We don't count this. We don't count this. We count only these numbers. How we do it? We just add these numbers and see what is average. And in average we have, for example, 65 pips. It's our average daily move. It is first type how you can count ATR. Let's take a look on another. The second type of ATR, it is technical ATR. You can find it only in a graph, on a real graph. It's a distance between key levels. How it looks on a graph. For example, we had some key level, after that we have another key level. And for example, we want to open buy from this key level. We need to take a look on distance between this and this key level. It's our technical ATR. ATR. For us, it is important to see the distance between it, because before we open entry, we need to understand, can we take 1 to 3 risk reward or even 1 to 5? Because if distance here less than 1 to 3, it's hard to take your mathematical expectancy. Because, for example, we set stop loss here, and here we can take 1 to 5. Yes, it's a good place to open entry, because probability that price will go up to another key level so big, but we don't know what will be after when price will hit this level. There could be a continuous trend, or the trend can change from that place. That's why you should use ATR, especially for swing trading, for midterm trading, because your goals will be before next key levels. Okay, let's take a look on a graph how you can count properly these two types of ATR. Let's take a look on real examples how you can count ATR. As I spoke before, there are two types of ATR. ATR, it is average true range, or average daily move. Average daily move, it is your fuel, because if price moves in average 100 pips per day, there's a little chance that price will move more. That's why, especially if you're intraday trader, you need to pay attention on it, because if price moved its average daily move, no good chance that it will continue. and you have low probability that you will take your profit. Okay, let's take a look how you can count mathematical ATR. First, what you need to count last 5 candles without paranormal candles, which is bigger than 2 ATR. And don't use little candles, which is 30% of average ATR, because for you it's important to find average. Let's count how many pips price moved from this place to another. For example, like here, price moved up 82 pips. Let's open our calculator. What we do, we just add 5 this number and take a look on average, 81 pips. And after that, price moved 71 pips plus 71 plus 79. And take a look on this candle. It is 1,540 pips. We don't count such candle because this candle bigger in 2 times than previous. We use this candle. And here we have plus 89 pips. And also we use this candle, 101 pip. And 1 pip. And after that, we just take a look in average. It is 84 pips in average. And after that, you understood, if gold, for example, moved up 100 pip, that means the price moved up its ATR. And the price do not have enough fuel to move the price ahead. That's why it is not wise to open buy entry, for example, here, because price moved up. Or what you need to wait on a pullback. When price moved up more than 2 ATRs, in that case, you can look on pullback, how to open entry on a pullback. But the best is to open entry to continue of the trend. Also, don't count such candles, paranormal candles, which is more than in 2 times bigger than these previous candles, which bigger than average ATR. I just showed to you how to use mathematical ATR properly. Once again, you use 5 last candles, you just count average daily move per that candles without paranormal candle, which more than 2 times bigger than average and which is less than 30% of average. Also, there are a technical ATR. What is technical? It is a distance between key levels. What does it mean? Mostly price moves from one key level to another. That's why when you set your stop losses and goals, you need to count on that. When you, for example, open a position, you need to understand, do you have enough perspective plays to get your potential profit? For example, like here, when you open a position, you have possibilities that price will move to another key level. Next key level, 1,323. Here is more than 200 pips. And for you, it's enough to take your potential profit. But for example, if your stop loss is really big, for example, 100 pip and distance only 200 pips, it is really hard to take even 1, 2 mathematical expectancy. The best to take more than 1, 2, 3. Use low stop losses, because only low stop losses will give you big probability to get enough mathematical expectancy. In next video, I will show you how to use entry points and exit points. When you will open a position and will set proper goal, you will always use technical and or mathematical ATR. Without it, it will not be a proper trading. Okay, let's go to another lesson.